That is the single biggest reason I found to support my bullish thesis. Clover Health has garnered a lot of attention from Reddit, from Hindenburg Research, and from a lot of different sources. But it hasn't really done much since June when Clover rapidly spiked, causing many, including yours truly, to dub Clover Health as the next meme stock. Well, I was wrong, or at least I think I was wrong, but that happens even to people on YouTube who are trying to grow their community. If I knew everything, I wouldn't be here. I would have built myself a mountain city and solved the world's problems by now. Okay, back to reality. Clover Health intends to transform healthcare and health outcomes through its revolutionary Clover Assistant. However, not everyone believes the Clover Assistant is revolutionary or even beneficial. Hindenburg claims that many doctors tolerate it at best, and most flat out refuse to use it. Other sources say it's underwhelming. Aside from Clover Assistant, Clover Health has a direct contracting business. This business has been impressive, causing the revenue guidance of Clover Health to exceed Wall Street expectations by almost 50%. They are now projecting over $1 billion revenue for the coming year. Clover has some massive competition, including United Health, Anthem, Cigna, Humana. However, they should probably be more directly compared to some of the smaller names on this list, such as Bright Health Group, Oscar Health, Alignment Healthcare, and Trupanion. These companies have market caps much more in line with Clover Health. The final high-level aspect of Clover Health is that they lose a lot of money. Revenue has surprised Wall Street to the good side. However, the EPS numbers have surprised Wall Street to the bad side, the very, very bad side, during the last earnings announcement. Now that I've set the scene and the mood, and we've talked about the losses in the revenue and the Clover Assistant, well, I'm still a long-term Clover Health bull. In this video, I'm going to look at the short squeeze and the subsequent 2 attempts that have failed to squeeze, specifically looking at volume and how they failed to achieve what GME and AMC achieved. I'll look at the 3 reasons why you should not expect a short squeeze in the future. Finally, I'll let you know why I'm still bullish, even though I've talked about so many negatives of the short squeeze. In June, the short squeeze topped out at over $28 per share, but quickly fizzled out. Within a month, the share price had already retreated below the $10 per share number. Since reaching its initial bottom on July 19th, Clover has been trading in a range between 8 and 11. Over the same time, the absolute value of the short interest has trended downward, but recently popped a bit. With increased trading volume, the days to cover ratio has stayed relatively low. Having been around 5 days in May, it has fallen to 1 and has not spiked due to the increased volume. On August 12th, there was another attempt to short squeeze, as volume spiked and the share price jumped to a high of $9.65 per share. The second attempt to short squeeze took place a few days ago on September 7th. The share price jumped higher all the way up to $11.13, and the volume also reached the highest level since June, with over 170 million shares changing hands. If we compare the short squeeze behavior of Clover Health to the short squeeze Keens, GameStop, and AMC, we will see fundamental differences. First, we'll see that GameStop and AMC started at lower share prices. They were just cheaper. Second, GameStop and AMC have both remained relatively stable and have even achieved higher lows over the last few months after the initial squeeze had fizzled. There is, however, a similarity between the companies. That similarity is they have all experienced significant volume decreases. The number of shares trading hands per day has been lower in all of these examples. This difference between the behavior of Clover Health versus GameStop and AMC shows me that Clover Health should not be thought of as a meme stock, and investors should not be expecting Clover Health to squeeze anytime soon. First reason, Clover isn't likely to squeeze. The market isn't buying the Clover Assistant as a game changer Clover claims it to be. Clover claims to be a technology company. The technology should be reducing healthcare costs and generating satisfied patient outcomes in a manner that satisfies doctors as well. However, the evidence for this is not seen in the stock price or in the media. Without Clover's calling card being well received, it is difficult to see them squeezing anytime soon. The second reason Clover isn't likely to squeeze. The analysts covering Clover Health are few in number and they are bearish in mindset. NASDAQ only lists 2 analysts covering Clover Health, Bank of America and JP Morgan. And over the past months, the aggregated price targets have been lowered. During the spring of the year, the average price target was over $13 per share. And now the average price target is only $9 per share. These 2 points can be seen as negative because there isn't a lot of interest in Clover Health stock, and the interest that is there isn't very bullish. Reason 3. A lot of the impetus for the analysts reducing their price targets may be centered around the recent earnings performances from Clover Health and the fact that the recent earning performances from Clover Health haven't been too impressive. They've been rather negative in nature. And in Q2, the EPS results were extremely negative. More than double the expected loss was reported. Wall Street does expect Clover Health to start reducing their losses over the coming quarters, but this has not yet caused the analysts to start increasing their price targets. Before I go into why I'm still bullish, I want to get your feedback on a topic that I found online. Usually mainstream investors don't like massive swings in their portfolios due to lack of predictability. Leave your feedback in the comment section down below. I for one do not agree with this statement. I have an expectation of much higher portfolio volatility, and that's fine with me. If you're enjoying this video, please consider liking it. My bullishness stems from the following points. Clover Health insiders have been reasonably active, and this activity has all been bullish. Over the past 12 months, insiders have purchased 15 million shares and have engaged in no selling. I interpret this to mean insiders are bullish because the only reason to buy the stock is to watch the price go up and make money. People might sell for many reasons, but they only buy for one. Institutions are holding 59% of the outstanding shares. This combined with the 15% owned by insiders means that almost 3/4 of the stock, the outstanding shares, are held by institutions or insiders. With such a large portion of the Clover Health outstanding shares of stock belonging to and being held by institutions and insiders, it seems that a lot of this trading activity, this high volume taking place on a daily basis, must be centered around the 1/4 or 26% of the stock that's still out there for the public. It's the same shares trading hands over and over again throughout the day and throughout the week. Additionally, warrants issued as part of the go public transaction have now either expired or been redeemed. This would indicate that the dilution of the stock would require new stock to be issued. This leads me closer to my thesis that the bottom is in. Clover Health has reported disappointing earnings numbers over the last few quarters. However, their revenue numbers have been very impressive and even surprised and exceeded the expectations of Wall Street, due in part to the direct contracting business that may become Clover Health's hallmark over the coming quarters. Clover Health is now looking at revenue expectations of over $1 billion, which would be a new record during this current fiscal year. Clover Health has also built a reasonably solid support level around $8 per share. Only time will tell if my bullishness pays off or if I was wrong. In the interim, I will keep you up to date. I think that's all I've got. I like Clover Health, but I do not see them as a short squeeze candidate. I do not see them as a meme stock. Jonathan out.